Tech stocks continued their sell-off, with the S&P 500 down 2.78% today. The Nasdaq fell even further, falling over 4% on the day. In Canada, stocks fared a little better, with the S&P TSX Composite down just 0.73%. In Europe, the FTSE was slightly down, and in Asia, the Nikkei was up 0.8%. Oil had a really rough day, with WTI down more than 7%, finishing at a price of 36.88. Gold was up. In the Treasury markets, yields were down, with the US 10-year and Canada 10-year down about 4 basis points. In the currency markets, the winners were the Japanese yen and the US dollar, while the losers were the British pound and the Canadian dollar. There's been a lot of talk in the mortgage industry, and especially the housing industry, to see really how the housing market's going. We've seen a lot of numbers come out that the housing market's been doing really well. Prices are up, sales are up, and all that, which seems counterintuitive to the given circumstances of a global pandemic, things being shut down, even your ability to try and go view houses has been reduced, as well as less people are listing their houses in many areas. But this article is pretty interesting, just looking at the mortgage side of things. As it says here, that about 2.25 million mortgages were at least 90 days late in July. That is a 450% increase from before pandemic levels. And this shouldn't be too much of a surprise, as many people are out of jobs, there's a lot of unemployment. But this also puts into question things like evictions, like that, and its effect on housing prices. As we probably aren't seeing really any evictions due to rules surrounding the lockdown in that, you could potentially see evictions start to pick up. It makes me think that possibly we could see a deterioration in housing prices, lowering of housing prices. Overall, it says here that new mortgage originations actually reached 1.1 trillion in the second quarter, which is a record. Isn't too surprising based off of the lowering of rates as well, as rates have slipped just below 3% for the first time in history. Quite a low rate, as the Fed has increased their quantitative easing programs to partially help with that. It's interesting to say here that they calculated a monthly principal and interest payments on a $400,000 mortgage would be $1,686 at 3% compared to $1,910 at 4%. So on the other side, there are a lot of people saving a decent amount of money on their mortgages, but what I'd say is watch out for those foreclosures. As things in the economy seem to be going quite well right now, I feel like a lot of it hasn't yet hit, and we're just pushing it back into a later term, as things like defaulting, bankruptcies, and that I expect will probably pick up into the next year. It looks like Ford Motors might be having a strike, with the union negotiations ongoing. So what's going on is, I guess, Unifor says that Ford might be the target of their strike, as they handle multiple different automotive companies. I didn't know that the union was this big, as it says they'll be trying to use this potential strike and negotiations with Ford to work on deals with other manufacturers as well, like Fiat, Chrysler, and General Motors. It's pretty crazy to me that the union actually has this much power, that they're able to affect different companies. Seems like a strange aspect for a union to work, how they don't just necessarily represent the workers' rights in one company, but in multiple companies. Seems kind of like a slight conflict of interest. GM has announced another partnership after they've taken a $2 billion stake in Nikola Corp, who makes electric vehicles. Currently, though, they don't actually have any revenue, as they haven't reached that stage yet. They're at a $13 billion market cap, so General Motors is taking a sizable stake in the company. They're using this partnership to try and build electric pickup trucks together. This is a surprise to me when you consider that General Motors also just partnered recently with Honda to work on parts. I wonder if there's possibly any connection to this partnership, maybe something going on there, but it doesn't really say. Overall, they're just trying to expand their area into the electric vehicle market to try and compete with companies like Tesla, which is understandable, especially when you consider Tesla's stock performance this year has been pretty insane, being up, I think we've seen about 500% in some areas. So let's see if this works out for GM, an interesting prospect. Some interesting news relating to U.S. and Chinese tensions come out today as the U.S. bars some Chinese companies in the area of cotton and textiles, as well as possibly in some other areas going forward. It's pretty interesting that the reason for this one isn't quite the same as other ones, as they claim that this has to do with alleged repression of the Uyghur Muslim minority groups in the China region, and that they're using this as basically to take a stand, as I guess this has partly to do with them in those companies. It's interesting to see how this will progress as tensions do seem to be going up. I imagine that China will have some retaliation in terms towards the United States, but this probably does look like a good decision from the US, especially in terms of Donald Trump and his election. Over in South Africa, things aren't looking much better, with their Q2 GDP shrinking 51% on an annualized basis. This is following a revised 1.8% contraction in the first quarter. This isn't very good news for South Africa, as they've had other struggles this year when it comes to their bonds as well as their currency. They've been struggling for this year, and the coronavirus really hasn't overall helped them try and get out of that hole, and it looks to overall be getting worse. They might see some recovery later in this year, but it's hard to say exactly how much.